Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. As always, I'm very excited to welcome you all to yet another promising edition on the Forex Morning Mastery. In fact, our last edition for this week, where we will be reviewing our performance through the course of the week to see how the positions we took had performed and how market had performed generally as we prepare for the last trading day of the week. Happy Friday to everyone in the house. And I would also like to appreciate every single one of you who had waited for me, as I had to sort out some personal issues behind the scenes, because if I don't do so, it will abruptly interfere with the session. So I needed to sort this out before we begin. But thank goodness everything is all well and good at the moment, and I'm very excited to welcome you all to another promising session. So far this week we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, my favorite amongst them all. And so far this week, though, we had some couple of losses in some assets that we were monitoring, but at the end of the day, we're still doing fairly well across board. We are going to be looking at that this morning, and let's see how we can use the historical data we have on the charts to strategically position ourselves for the next move. So far this week, we've had some quite interesting development across board. The US economy continues to churn out data that's emphasized that the economy is still sluggish at this point in time. We saw the labor data that came in yesterday, that is the US initial jobless claim, which did not do very well, and which has further increased the expectation that Federal Reserve is going to be cutting interest rate anytime soon. And this is a very, very key development in the market as we round off the new week and of course prepare for the NFP data coming on later today. And of course, we also had a very another important event as regards to interest rate decision in the European economy. The ECB dropped their interest rate by 25 basis point yesterday, which is a sign that major global economies may likely follow suit as time goes by. And with the data coming in from the United States, it is very likely that we will be seeing some interest rate cuts anytime soon. So we are going to be looking at that in a moment. But before we go into the details, I would like to welcome newcomers in the house. For those of us who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. And you may be wondering what this is all about. What is it that we do here on the Forex Morning Mastery? Well, as technical traders, we usually gather here 3 times in a week, Mondays, Wednesdays, and Friday, where we come together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. And it's important for me to also emphasize that this platform should not be considered as a signal service platform, but more or less an educational tool, as we all come here to have a deep insight into the market dynamics, looking at things through the lens of both technical and fundamental perspective, with the utmost intent of strategically position ourselves for the next move. So that is why the comment section is open. We can all engage together, chat, talk, ask questions, and of course by doing so we are all going to be on the same page and of course be prepared for the day. My aim here is to equip us all with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will enhance your own trading decisions and strategies. So once again, I do welcome you all on board, and I encourage you to actively engage in the comment section. So with that being said here, I want to, okay, I can see a bunch of comments here in the comment section. Wokocha Kingdom, good morning to you. Glad to have you around with us today. I see you, Abasi. How are you doing today? Abasi says he has a sell trade stock at $2,304. I'm very sure that must be the gold you're talking about there. Do you think gold will come that point? I'm in big loss at the moment. All right, I'm very sorry to hear about that, Abasi. Well, I can't remember us projecting any sell position on the XAUUSD, at least for this week. Instead, we have been buying this asset, considering the fact that fundamental factors behind the scenes is supporting a high appeal for safe haven assets in this scenario. Remember, we're talking about geopolitical risk. We're talking about potential interest rate cut from the United States, which obviously will be influencing a higher appeal for non-yielding assets such as the gold. So we are going to be looking at that in a moment. When we are going to be looking at gold, we'll look at that in the moment. We'll look at the potentials the buyers and the sellers have and use that information to strategically position ourselves for the next move. And if at the end of the XAUUSD session, you could easily ask me any question thereabout. I see you, Fluoride. Oh, thank you very much for the support, Fluoride. Thank you very much. Like I said, if you found this content helpful and useful in making your independent trading decisions, kindly give the video a thumbs up. It serves as an inspiration for me, and it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And at the same time, you're also supporting this community to grow. And thank you very much as you do so. So with that being said here, let's dive right into the business. And as usual, our daily routine is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing, so that we can position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on high impactful events from both the United States and the United Kingdom economic docket. However, in scenarios where we do not have any high impactful event for that day, we include the mid-tier economic features so that we can have a broader view into what market participants will be looking forward to. Now, for this week so far, we did not have any high impactful event from the United Kingdom economy. So most of the sentiment in the market this week has been driven from economic features from the United States. So so far this week, we had the highest manufacturing PMI, which obviously gives us an insight into the health situation of the manufacturing sector. And considering the fact that it was a PMI data, I told us all that PMI it has a gauge between 0 to 100, where anything below 50 is considered as a contraction in that sector, and above 50 is considered as an expansion. And of course, we saw on Monday the ISM manufacturing PMI came in way below market expectation, even below the 50 mark, which is considered to be average. And this further details the sluggishness of the US economy. Remember, in the last couple of weeks, 2 to 3 weeks now, we have been seeing data from the United States coming in below market expectation, and this further giving us signs that inflation is gradually thinning out. The CPI data came in below expectation. The US Consumer Sentiment Index was also below expectation, showing signs that things are gradually thinning out in the United States. Then on Wednesday we had a labor oriented data in the form of the ADP employment change. For those of us who do not know, this gives us an insight into the change in non-farm private employment in the United States. And of course, a positive ADP figures usually indicate that there is job growth in the United States over the last 30 days. But the data we saw showed that there were a lot of there was a decline, giving us 152,000 as against the market consensus of 173,000, and it was even way below the previous month data, which came in at 188,000. So unemployment is rising in the United States at this particular point in time, and this is not a good data. This is not a good sign for the United States economy. Though we had the ISM Services PMI, which is considered to be a key economic indicator that measures the performance and expectations of the service sector in the United States. The data came in above 50. In fact, it was way above the previous month data, and of course above the market expectation. So we had a positive one there in the service sector, showing us signs that there has been some expansion there in the last 1 month. Now, yesterday we had some couple of mid-tier economic features, which is not here because I only pulled out the high impactful economic event. So yesterday, for those of you who are with me on my TradingView and Telegram platform, I did mention that we will be looking forward to the US initial jobless claim count, a labor-oriented data, which gives us an insight into the number of people filing for unemployment insurances. Now, this is if the data comes in higher, it shows that there is an increased unemployment rate in the United States in the last 30 days, and of course that was exactly what happened. So we had an insight into the labor sector cooling down at this point in time, and for me this has further increased the expectation by market participants that Federal Reserve is going to be cutting interest rate anytime soon, and this is not going to be good news for the US dollar. For those of you who have been with me for a while now, you understand the theoretical dynamics behind interest rate decisions and its relation to the value of the currency asset of that particular economy. So let me just quickly give you a brief insight into what it means. Now, if interest rate is expected to be reduced, this further reduces the value of that particular asset, as those investors who want to who had invested in the US dollar currency will definitely want to start dropping the currency due to this economic data, which could incite interest rate cuts. And of course they would like to sell this this currency asset due to the, okay, for instance, let me give an example. If you are using a British pound to buy a US dollar, so British pound has an interest rate of 5.0 to 5.25 thereabout, while the US dollar has an interest rate currently at 5.5%. Now, if you are using the pound sterling to buy the US dollar, you have a differential interest rate return on investment of 0.25%. Now, if there is a high speculation that interest rate will be cut maybe by 25 basis points to, let's say, 5.25, then that means the interest rate of the US dollar and the pound sterling will be at par. Now, if they don't sell their currency asset right now before the interest rate cut comes in, then if they are selling their US dollar after the interest rate has dropped, then they will not be making any profit on the asset. So most importantly, if any interest rate cut is coming anytime soon, market participants clamor to start selling their particular assets. So what this simply means is that the data coming in from the United States in the last 2 to 3 months now, is projecting the possibility of an interest rate cut, and we might likely be seeing some huge traction of market participant dumping the US dollar for maybe the gold commodity, which is known as a conventional safe haven asset. Now, we might not see that big traction yet due to the fact that we're looking forward to another high impactful event today. So we have two labor oriented data today. The first one on the list is, in fact, they are going to be coming in simultaneously. Now, the first one we are looking at this morning, I think it's coming in about 3 hours from now, I guess 12:30 my local time. So that's about 3 to 4 hours from now. So it's very important for us to mark out the timing so that we can be around to see the pattern formation we have on the chart and use it to strategically position ourselves for the next move. So the average hourly earnings, for those of us who do not know, represent the average amount earned per hour by private sector employees in the United States, and it is considered to be a crucial labor market indicator. Now, if the figure for the average hourly earnings comes in higher than expected, it is generally viewed as a positive development by investors, as they indicate that there is wage growth in that sector. But if the data comes in lower than expected, then we may likely be seeing the value of the US dollar drop to the downside. So let's look at what the data said for last month. We had a 0.2% expansion for the month on month and 3.9% expansion for the year on year. And based on what is on ground at the moment, we have economists and market participants projecting that the data is likely going to come in almost as the same as the previous month. So we'll be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectation, or even beyond market expectations? Then simultaneously, we are going to be looking for one of the major highlights for this week, which is the non-farm payroll. This is a key economic indicator that measures the total number of paid U.S. workers, excluding farm, government, and non-profit organization employees. Now, this data provides us an insight into the overall health of the labor market and has a substantial impact on the sentiment in the market. Now, a higher than expected NFP data is typically seen as positive, signaling economic strength, and often boosts investors' confidence in that currency asset. Now, from the look of things, I'm thinking that the data may come in below market expectation, but we never can tell. Anything could happen. But from all ramifications, from all the latest development from the United States economy, majority will be leaning to a lower than expected figure. However, if we look at the data here for the previous month of April, it came in at 175,000 growth, and economists are projecting that for the month of May, that there was an employment of 185,000 people into the workforce in the United States. So we are going to be looking forward to see what the actual data will be on that one. Will it come in just as expected, below expectations, or even beyond market expectations? Now, one thing I also want to emphasize here is that as technical traders, we do understand that the anticipation of this high impactful event usually has a way of influencing the sentiment in the market, which obviously will reflect on the chart as price action. Now, I talked about this in the past, where I mentioned that major key players in the market do have inner cycle in this department, which give them first-hand information on what the data is going to be looking like. Now, based on the information they get, they are likely going to be building some positions ahead of this event, which usually would reflect on the chart as patterns and structures that we retail traders will be using to understand the trail of the big players in the market and see how we can use that information to strategically position ourselves for the next move during the event or prior to the event. So we are going to be going right into the chart right now, and let's look at things from a technical standpoint using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. So I see you, Abasi, no problem, and it's okay. We shall be looking at that in a moment. All right, I do hope you stay tuned in. So with that being said here, let's dive right into the business. And as usual, I didn't open down my USOILSPOT, so I will just have to open that right now. So please, it might take some time. I don't know why my USOILSPOT usually takes a while before it loads up. So let's see, it might take about 10-20 seconds thereabout. So I will just try to open another one. Let's see which one opens faster. All right, so here we go. So the first asset we are looking at this morning, as usual, is going to be the USOILSPOT. And for the USOILSPOT, we've done tremendously well for this week. Remember, at the beginning of the week, we were selling the USOILSPOT, where we were able to capitalize on over a 320 pip move to the downside. And during the second half of the week, we also noticed the potential traction in buying power around that $72.50 level, and of course we did strategically position ourselves for that buying opportunity, though it took quite a while before that momentum kicked in, but we were able to catch up on that bullish momentum during the second half of the week. Now, before we go into the details, let me emphasize here that during the Forex Morning Mastery, we only focus on the 1 hour time frame, which is our execution time frame. So we already done a top-down analysis on the USOILSPOT at the beginning of the week, and if you in any way missed out on that session, you might want to check the link right in the description box below to have a background knowledge of how we got to the structure you will be seeing on the 1 hour time frame. Now, for educational purposes, let's run through what really happened at the beginning of the week. Now, remember that we had this beautiful descending trend line, which was serving as the resistant line of that descending channel we identified on the higher time frame. Now, this trend line here, at the beginning of the week, we saw how price action was trading above that trend line, and we were of the opinion that we may be seeing a situation where price, after breaking out of that structure last week, it may come back to retest the structure in an attempt to continue the uptrend move. But if price drops below the trend line, we said we will be looking out for selling opportunity. And with our key level situated at the $77 area, remember our key level, just a quick reminder, our key level serves as a yardstick to guide our trading activities for every week. Now, if price trades above our key level, we look out for patterns and structures that supports the idea of buying. But if price drops below our key level, then we look out for patterns and structures that supports the idea of selling. Now, with this idea in mind, we had a range-bound structure during the first 12 to 15 hours of the week, where price action oscillated right around that key level, giving us a confinement of price action between the $77.35 level and the $76.50 area to emphasize the prevailing uncertainty in the market at that particular point in time. And of course, whenever we identify a range bound structure in this community, you know how we do it. We exercise patience and wait for price action to give us a directional signal in the form of, which will come in the form of either the breakout of the resistant line of the range to give us an opportunity to buy, which obviously never happened, hereby negating any idea of buying that asset at the beginning of the week, or the breakdown of the support line to give us an opportunity to sell. Now, with our position placed at both ends, we were able to capitalize on this bearish opportunity at the breakdown of the $76.50 level, riding all the way down into the $72.50 area, scooping in over 350 pips. But after moving our stop losses, we were taking out with about 320, 310 pips on Tuesday. So congratulations to everyone who were part of that profitable journey. So we were not able to had multiple entries on this one, as that move moved suddenly to the downside. Now, during our Tuesday and Wednesday live session on the Forex Morning Mastery, we begin to notice that sellers have lost that momentum, as we saw that as soon as price action tested the $72.50 level, we begin to notice buy pressure resume around that area. Now, after enough introspection into this whole structure, we scaled up into the 4 hours time frame to see how the market had related to the structure in conjunction with what has happened in the past. And when we did that correctly, we were able to notice that during the month of December, during the month of February, January, December, November, October, that same $72.50 level had consistently been a demand zone in the past, as you will see. Even if we go to as far back as July of last year, that level has shown a strong memory for buying power. Now, with that in mind, that we are within a crucial, robust demand zone, we begin to consider the potential of a reversal setup from that particular area. Now, with that in mind, we were able to mark out some levels along that area where we saw price action was confined within that range bound structure. We had a $73.25 level and that $72.50 level, giving us an insight into the uncertainty at that particular point in time. And of course, whenever price action comes into a crucial juncture in the market, we usually see this level of uncertainty where market participants continue to digest the fundamentals behind the scenes to decide if they are going to be buying or selling. Now, with the situation here, we had an opportunity to sell. We were looking at selling only had the breakdown of the $72.50 level, which obviously never happened. And of course, we had our buy stop order above the $73.25 area, and in fact we had that buy position triggered on Tuesday, and it took about 48 hours before that momentum gained traction. So it was more of a consolidation on Wednesday, and not until Wednesday New York session we begin to see a tremendous traction on this one. And of course, we were able to maximize the potential of that bullish move by adding more positions at the breakout of the $74.35 level. And if you look at what we have here, if you still have your buy position running at this point, the first one is running with about 200 pips approximately, and the second one is running with about 85 pips in profit. So at this point in time, it is appropriate that we move all our stop losses and secure this current buy position. I did mention this in my commentary on both my TradingView and Telegram platform this morning, after noticing the latest development from a technical standpoint. Now, before we go into the technical aspect of this market, I would like us to have a quick review of the major market drivers of the US oil spot. Now, for those of you who saw my commentary this morning, you will have an insight into what I will be talking about. But for those of you who are not, let's look at this together. Now, what is the main reason behind this recent surge in US oil prices? Well, the recent speculation of potential interest rate cut by the US Federal Reserve has at least majority are even looking at 2 possible rate cuts before the end of the year. Now, this increased expectations has further bolstered the US oil spot. Now, how is that possible? How related are they? Now, like I did mention earlier, that if the interest rate is kept higher, it increases the value of the currency asset related to that particular economy. But if interest rate is, majority are thinking of a drop in interest rates, the value of that currency begins to drop. Now, remember, the US oil spot is a US dollar denominated asset, and whatever happens to the US dollar definitely will have its own effect on the US oil spot. So if the US dollar's value continues to rise, then the demand for US oil spot will drop. Why? Well, if the value of the US dollar becomes high, then the US oil becomes very expensive for other currency assets to buy, because for them to convert their local currency to the US dollar, they will have to pay a lot to convert to the US dollar. And as a result of this, the demand usually drops. But if there is a high chance that interest rates will be reduced, then the idea that the dollar is going to drop boosts demand for oil, and majority will want to put money into the oil, buy enough to keep in their stockpile pending the time maybe when the dollar will rise back again. So it usually escalates the price of the US oil spot commodity. So as a result of this expectation here, I think the path of least resistance for oil is looking bullish. Now, if we also consider the geopolitical tensions in the Middle East, remember the Middle East is one of the major suppliers of the crude oil commodity in the world. Now, the ongoing Israel-Hamas situation could further increase concerns of oil disruption from this particular area. And as a result of this, there are chances that this could bolster the US oil spot. Now, another factor behind the scenes is the OPEC Plus decision that happened on during the course of the weekend. I think on Sunday, June 2nd, where they projected that they will be reintroducing the supply into the market. Remember, they've been on production cuts for close to a year, if not over a year now, to artificially escalate the price of oil. Now, in their recent announcement, they are suggesting to bring back more oil into the market, and they allowed some members of the OPEC Plus to increase their oil outputs. And by the end of this year, they are projecting that about 500,000 barrels per day will pump into the market. And of course, when supply increases, what happens? Prices tends to drop. Now, they projected that by 2025, they will be having over 1.5 million barrels per day into the market. So we are within two market dynamics which are contradictory at this point in time. However, we shouldn't get to make it too complicated, as what we want to be doing here is to see how the market participants are going to be digesting this information, and of course their reaction or response to this information will reflect to us on the chart as price action. Now, going back into the chart right now and looking at where price action is, I do hope, before I go further, I do hope you've moved your stop losses on the US oil spot. I mentioned this in my commentary this morning on my TradingView and Telegram platform. Kindly move all your stop losses, secure this position, as we are at a crucial juncture in this market. Now, what do I mean by we are at a crucial juncture? Well, if you look at what has been going on here, let me zoom into this current structure so that you can see what we are talking about here. Now, if you look at since the later part of the New York session yesterday, you would have noticed that price action has been confined within a range between the $75.55 level and the $75.15 area to emphasize the prevailing uncertainty in this particular market. And I did mention to you earlier that whenever price action comes into a crucial juncture, it is expected to see this kind of choppy market conditions around this area. Hence, it's important for us to move on stop losses, secure this current position, especially as we're looking forward to the NFP data, especially on a day that is considered to be the last trading day of the week, where market participants tend to round up their trading activities ahead of the weekend. And of course, this could bring in some profit-taking activities, changing the course of price action at any time. Now, what do I mean by price action is back into a crucial juncture? Well, we have a beautiful confluence around the 75.55 area, where you will see that price action is right around the resistance line of that descending channel we identified on the higher time frame. Now, for the sake of clarity, let's quickly look at that together. So let's hop into the higher time frame, the 4 hours time frame to be precise. And if you look at what we did here at the beginning of the week, remember we were able to spot a descending channel on this particular chart. And after connecting the series of lower lows, we have the support line of the descending channel. And then when we connected the series of lower highs, we had the resistance line of that descending channel. Now, if you zoom into the current structure, you will see though price broke out of the structure last week, and of course we saw price come back to retest the structure at the beginning of the week, where we were considering the potential of an uptrend as at a point of retest of structure or a decline if price drops within the descending channel. Now look at what happened after price dropped within the descending channel, which we were part of this bullish momentum all the way back into the resistance line of that descending channel. As you will see, price is back into the resistance line, and whenever price comes into the resistance line of the descending channel in the past, what happens? Selling pressure comes in at every point in time to push price to the downside. Now, the question going into today's trading session is, will price action respect this resistance line one more time to incite a sell-off to the downside, or are we going to be having a breakout retest of structure to continue the uptrend? Now, you would agree with me at this juncture that we are at a crucial area where, depending on how market participant reacts to this confluence, will determine if we are going to be buying or selling today. Now, in order to navigate the current market dynamic around the resistance line of this descending channel, we've been able to identify a range-bound structure. Now, let's scale back down into the 1 hour time frame so that we can see things very clearly. Now, let me zoom into the structure. Look at what we have here. So this is the range bound area, just right around the resistance line of that descending channel. Hence, we want to exercise patience around this area and see how the market is going to react to the structure. Now, if we look at things from a technical standpoint, you will see we had an impulsive move all the way into this area. And if you look at this structure closely, it appears we can see price action transitioning, or let me say evolving into a potential uptrend continuation pattern in the form of either, you can call it a flag pattern or a bullish rectangle pattern, depending on which perspective you are looking at it from. So the most important thing here is, if this is going to turn out to be an uptrend continuation pattern, then a breakout of the resistance line of the $75.55 level of that range bound structure will be a good signal to continue the uptrend. In fact, a breakout of the $75.55 level would also have broken out of the resistance line of that descending channel, giving us a signal that the resistance line may no longer have the capacity to negate the bullish attempt anymore. So that is the only condition for us that will make us buy this asset today. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the opposite direction as well. What are the chances sellers have in this market? Remember, you can plant something. The market is an uncertain environment. Anything could actually happen. And what we usually do in this community is to strategically position ourselves in such a way that we can capitalize on any opportunity that the market presents to us today. Now, with the situation we have here, the only condition that will make us sell at this point, that is price respecting the resistance line one more time, is for price to break down the support line of that range bound structure to incite a sell-off at this point. So we have the support line at the $75.15 area, and in fact, before I can consider selling, I would like to see a confirmation happen, like a retest of structure, which appears to be happening right now, to join the bearish momentum to the downside. So if you selling at this point in time looks much more reasonable, we're looking at a breakdown, retest of the $75.15 area to join the decline to the downside. Now let's scale down into the lower time frame. Let's go to the 15 minutes time frame to see the character of price action around that that support line of that range bound structure. Now if we look at what is going on here, let me zoom in. This is the 75.15 level that we identified on the 1 hour time frame. And if we look at the nature or character of the candles that broke down that structure, you would notice that we have a couple of hammer candles around that area. And whenever we sight an hammer candle on the chart, it is a sign that buyers are still present in this particular market. So for me, I wouldn't be jumping into a sell now, unless the only condition for me to sell at this point is for price to break down that $75 area, which is the lowest point where we had the emergence of those hammer candles. So a breakdown of the $75 area looks much more reasonable for me to join a bearish momentum at this point. Now, for those of us who are joining for the first time, remember we do have two ways through which we capitalize on breakouts of structures. Now, for those of us who have been part of the profitable journey since the beginning of the week, we can afford to leverage on some of the profit we had made so far this week. And what this simply means is that you can simply place your self-stop order below the $75 area to join that bearish momentum. And if it doesn't work, you know that you are only risking some of the profit you had made so far this week. So that is one perspective to capitalizing on breakout of structures in this community. However, if you are new with us and you are yet to build a profitable position on that particular asset, then I would encourage you to exercise patience and wait for confirmations to happen before jumping into that position. And what we mean by confirmation here is price breaking down the $75 area, retest the structure right here on a lower time frame before continue the momentum to the downside. I do hope I made myself clear there, but if you have any questions, feel free to let me know in the comment section. Now, talking about the bearish momentum here, there is a caveat to this whole setup which we also want to be taken into consideration as well. So should in case price action continues to the downside here and we join the momentum, please note that we have a crucial juncture around the $74.35 level, which shares a beautiful confluence with this temporary ascending trend line which has supported that bullish momentum since Tuesday's trading session. And of course, you know how we treat our ascending trend line. It continues to serve as a yardstick to guide that bullish momentum. So if we see selling opportunity drop and get close to this ascending trend line, please, we want to be moving all our stop losses on that sell position, secure it while we wait patiently and see how the market will react to that confluence. Now, if buy pressure resumes around that area, I'm of the opinion that we might be seeing the beginning of the second leg of that bullish momentum. However, if price breaks down, retest both the ascending trend line and the $74.35 level, this will be a good opportunity to add more sell positions to our existing sell trade on the US oil spot. So this is my simple view on this particular asset today. Let's see how the market is going to play out from this particular juncture. It could take about an hour or two before the formation emerges, but let's ensure that we are on standby to capitalize on that move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us update hazard when due. If you have any questions whatsoever as regards to our illustrations in the last 20-30 minutes or so, or you need some further clarifications on the US oil spot, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next financial asset on our watch list. And do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decisions. Remember, your likes is one way supporting this community to grow, and of course it's also served as a source of inspiration for me. And let's make the like tally with the number of people on board, and thank you very much as you do so. See you in about 10-15 minutes, 15 seconds from now, and remember to use that time to mark out those levels accordingly on your chart. So I see your comment here from Adeni Babalola. Good morning to you. Glad to have you around with us this morning. Yes, it's NFP day. In fact, we talked about the expectation of volatility. In fact, it's not just the NFP day, it's also the last trading day of the week. In fact, we tend to see high volatility on last trading day of the week as market participants round off their trading activities ahead of the weekend. And especially in an era where there are geopolitical risks, geopolitical turmoil, especially in the Middle East, majority might not want to leave their positions open ahead of the weekend because anything could actually happen. So it's true, we are looking for some very important move today, and that is what we are trying to do by strategically positioning ourselves for the next move. I see you, C40. Good morning to you. I'm happy you're here too. Hello, Sheriff Abdul Kadiri. Good morning to you. Glad to have you around. All right, so I'm glad you found that, C40. All right, so in the absence of no questions, I want to assume that we are all on the same page, and thank you very much for the support. I see your likes. We have about 13 likes, but we are yet to meet up with the number of people on board. So if you are yet to click on that like button, this is the cheapest way you can actually support me and this community to grow, and thank you very much for doing so. So with that being said here, let's move on to the next financial asset on our watch list. Stay tuned. So the next asset we are going to be looking at today is the GBP against the US dollar. That is the pound sterling against the US dollar. And of course, We've done fairly well on this particular asset since the beginning of the week. At least we do not have any losses. I think, yes, we never had any losses on the GBPUSD this week, as we've been buying this asset since the beginning of the week after price action broke out of that descending trend line we identified here, since that's curtailed the price action from last week Tuesday. I think about Tuesday, Upper Tuesday, the upper week Tuesday, 28th of May. Now, for the sake of educational purposes, let's quickly run through what really happened at the beginning of the week that led to us buying this asset. Now, once again, I would like to emphasize here again, we are only going to be focusing on the 1 hour time frame. If you do want to have a top-down analysis on this particular asset, I did a top-down analysis during last weekend. You can check the link right in the description box of this current video you're watching, and it will refer you to that. It can serve as an educational tool for you to understand how to use price action to understand the market structure of any particular asset. Now, right here at the beginning of the week, the week started on a bearish note, as you will see. It started on a bullish note. Actually, it started at around the 1.27355, and then we saw price climb up into the 1.2755 before it came back down into the 1.2735. Hence, we had a range bound structure and price action trading below that descending trend line. Let me show you that descending trend line. Let me highlight it for clarity's sake. So we have this descending trend line right here, and of course, you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling. Now, the only condition that will make us buy when we have a descending trend line is for the trend line to be breached and broken to the upside. So as at the beginning of the week, the potential of selling opportunity was much more higher, but unfortunately for me, I missed out on that sell position because by the time I analyzed this market, price had already broken down the support line of that range bound structure, had the 1.2735. So during our live session on Monday, we were looking at the possibility, that is for those of us who missed out on that sell opportunity, that price may come back into the structure where I mentioned that a reversal pattern will be all we need to continue the downtrend move. A reversal pattern in the form of either a double top structure, head and shoulder pattern, or even a rising wedge will give us a good confirmation to join the decline. However, that never happened, hereby negating the idea of even considering selling from that particular area. Now, I remember updating us immediately after seeing price action break out of that support line with an engulfing bullish candle right here. And at this point, I had a strong feeling after considering the fact that we saw another buy pressure above our key level at the 1.2700 area. And of course, you know how we use our key levels in this community. It usually serves as a yardstick guiding our trading activity for every week. And for the fact that we are seeing buy pressure above our key level, it's a red flag that sellers are not yet strong enough to push price further to the south. So as a result of this, I updated us on both my TradingView and Telegram platform that we will be capturing this bullish momentum even before the breakout of the resistance line happened. So we had the 1.275 broken. We had a level there where we said we will be adding buy positions and of course maximizing that move by adding another one had the breakout of the resistance line of that range bound structure. So as at the first day of the week, we were having two buy positions on this one. We rode that momentum all the way up, and of course we added one more, had the breakout of the 1.27925 level here, riding it all into that high at the 1.2122825 level before the bearish momentum came in. And of course, you know how we do it. We move our stop losses accordingly. The first, second, and the second position did very well, while the third position was closed at break even. So as at the end of Monday trading session, we were on the positive side of our portfolio on the GBPUSD. Then we saw bearish momentum resume in this market, as you will see here, but I didn't take it, considering the fact that we are within an uptrend situation in this market. Remember, we saw price break out of this descending trend line, which for me is a very good sign that this is an uptrend situation. And of course, from a technical standpoint, we do expect that price action will come back and retest the structure in an attempt to continue the uptrend. And as a result of this, I told us all that we will be looking out for reversal setups. You can see I wrote it right here that we are going to be buying a reversal setup between the 1.275 and the 1.27575 to join that uptrend move. However, some of us contacted me personally that they will be selling this one after identifying this double top structure, which for me is considered to be a short-term trading opportunity, and for scalpers, day traders, they were able to capitalize on this one. So we joined this bullish momentum right here. I think we had another chart to buttress this. Let me go to the second chart on the GBPUSD. So we had this whole situation here. So we rode it from here. This is what the second chart we had. So we rode it from here. Price came back again. So we saw a choppy market condition, but we maintain our bullish bias in this market. Now, during yesterday's trading session, I did tell us after price took us out of this position during the early hours of yesterday, I think was a fallout from the Asian session, I identified a new structure where I said here that we are going to be using this buy window to capitalize on the next move. So we marked out somewhere between the 1.277 and the 1.27560 area, a zone which shares a confluence with this ascending trend line that has been supporting this bullish momentum since the beginning of the week. And with that idea, continued buy pressure here was a good opportunity that triggered our buy position, and I did mention that we should be having another buy position at the breakout of the 1.279. So as at this morning, we have a minimum of 2 buy positions running on the GBP USD, and for those of us who capitalize on this opportunity, well done and kudos to you. So as it is right now, it is appropriate that we move all stop losses right now. Let's move it closer to price action so that we can secure some profit just in case the volatility in anticipation of the NFP could incite a massive sell-off. We never can tell what the data is going to be like, so it's appropriate that we move all stop losses to secure this current buy position. So for the first buy position, in fact, all buy positions here, all stop losses should be moved to somewhere around the 1.278 and the 1.27750 area. Let's secure some profit, and while we do so, let's ensure that we are leaving enough breathing space for price action to move around. So right below that structure seems most appropriate, as a breakdown of that level may likely negate this uptrend scenario. So with a well secured position at this juncture, what is going to be our next line of action? Are we going to continue buying the GBP USD today, or are there chances that sellers may come in at any point in time? Now, before we can answer this question from a technical standpoint, it's important that we also understand what is going on behind the scenes that may influence the sentiment, or has been influencing the sentiment in this market. Now, one of the major ones which we have talked about since morning is the increasing bets that the Federal Reserve will cut interest rate later this year. And like I told you earlier, in fact, majority are even suggesting that we will be seeing at least 2 rate cuts for this year, considering the signs of a sluggish US economy. And this obviously has been affecting the US Treasury bond yield negatively. The US Treasury bond yield has been struggling to gain traction. And of course, we all know in this community how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is not doing very well, there is a high chance that the US dollar will not do well too. But if the US Treasury bond yield is doing very well, then there is a high chance that the dollar will follow suit. But at the point in time, it's not doing very well, and it's very possible that the dollar too is not going to be following suit as well, giving the British pound more chances and more room to continue the uptrend. Now, for today's trading session, there are a lot of key economic features today that will be driving the sentiment in the market. Though, like I said earlier, there are no top tier economic features from the United Kingdom, but we still have some mid-tier economic features that I think that we should look at too to guide our trading decisions for today. Now, from the United Kingdom, we are going to be looking at the employment data, the UK employment data, which will be giving us an insight into the health of the labor sector in the United Kingdom. If the labor sector is doing very well, there is a high chance that this could rub off positively on the British dollar. Then we're also going to be looking at the monthly gross domestic product data from the United Kingdom as well, which will be giving us an insight into how far or how well the United Kingdom economy had expanded in the last 30 days. So we're also going to be looking at that one, and of course it's going to be providing us with an insight into the Bank of England's rate cut expectations. On Monday, I was telling us here that market are suspecting that the Bank of England may still keep interest rate higher for an extended period of time, considering the fact that inflation does not appear to be thinning out at this point in time, contrary to what the expectations was last week. Now, as a result of this, the possibility of an interest rate cut may be pushed back further. So with this in mind, and looking forward to this data from the United Kingdom, if this data come in positive, then there is a high chance that the pound sterling will continue to rise. And if it continues to rise, well, we're looking at more opportunities to buy at the breakout of the 1.28150. Then another event that we are looking forward to today, the highlight for the week, is the NFP figure, which is, like we said earlier, is projected to show an expansion of about 185,000 jobs for the month of May. So we are going to be looking forward to see if that is going to be the case. Will the data come in just as expected, below expectation, or even beyond expectation? But one thing we want to understand here is that if this data comes in higher than expected, it may knock off the idea of interest rate cuts again and further bring in this hawkish sentiment in favor of the US dollar. So you can see the market is a very dynamic environment, and it's very important that we be on standby to capitalize on whatever opportunity the market will present. So as a result of this new developments, the ascending trend line here, which has been supporting the bullish momentum since last week Thursday, is going to be serving or playing a key role in guiding our trading decisions for today. And remember, after we connected the series of higher lows since last week Thursday, we have this beautiful ascending trend line. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying the asset. Now, the only condition that will make us sell here is for this ascending trend line to be breached and broken to the downside. Now, I would like to do some little adjustments so that this trend line will capture most of the pivot lows here. You see, it's very important that we adjust our trend lines accordingly as price action moves, because things are not static on the financial chart. So we need to be moving our trend lines accordingly. So as at this point now, we have price trading above the trend line. Now we continue to look out for buying opportunity, and like I said, a breakout of the 1.2815 will welcome more buying opportunities. Now, what are the conditions that will make us sell the GBPUSD? Well, for me to sell the GBPUSD today, I would like to see price take out all the buy positions here at the 1.27560 area. Remember, we had this area marked out 2 days ago, was it yesterday, for buying opportunities. And of course, if you look at what has been going on here since Monday's trading session, you will see how the 1.27560 area has served as a barrier for sellers since the beginning of the week. As you will see here, every attempt by sellers to break through that structure has always failed, as we saw buyers push price to the upside. So for me, this area is a robust demand zone. Now, for me to consider selling at this in this market today, I would like to see price action take out all the buy positions here, break down, and if possible retest of structure for further confirmation to continue a decline to the downside. So that is the major condition for me to consider selling the GBP USD. However, if we look at what happened since the beginning of the week here, you will see that we had selling pressure around this area, and since price tested the 1.28150 area, buyers have found it difficult to even come close to that area. Instead, we've seen lower highs in this case scenario. Now, if these levels continue to negate bullish attempt, we may see situations where sellers could come in. Now, if we I think I'll have to use a candlestick here, candle chart here. We look at this closely. Let me thicken this a little bit so that we can see the descending trend line clearly. So you can see if this descending trend line is not breached, or buyers find it difficult to break out of the structure, we may have a chance of joining a bearish opportunity even before the breakdown of the 1.27560 happens. Now, I want to see convincing, uniform series of lower lows and lower highs on the lower time frame before joining a sell opportunity, that is before the breakdown of the 1.27560 level. Now, what I'm looking out for here is a uniform breakdown retest of structure, something like this, and if it's consistent, I will be planting a sell position, risking a sell position before the breakdown of the 1.2756 happens. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give us update as at when due. So this is my simple view on the GBPUSD chart for today. It's a simple trading setup. We've marked out levels we are going to be using to capture trading opportunities. We've marked out the major trend, and of course we've marked out the descending trend line, which may signal a sell-off just in case the NFP data comes in higher than expected. So let's see how the market will play out around this area, and definitely we shall be here together to monitor price action on both my Trading View and Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Please do not forget to give that video a thumbs up. We have over 20 people on board. Let's make the likes tally with the number of people on board, and thank you very much as you do so. So I will be seeing you in about 10-15 seconds from now, and do not forget to use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. See you in about 10-15 seconds. All right. So I see you in the comment section. Hello, Salami. Good morning to you. Glad to have you around with us today. And Salami is asking, how can I join your Telegram platform? Sure. Look at the bottom of the screen. You will see my ID scrolling at the bottom of your screen. You can just type it out on your Telegram platform and it will take you to my channel, or you can look for the link right in the description box of this current video you are watching. All right, so thank you very much. All right, so in the absence of no further questions, I think we are all on the same page at this point, and all I've said so far has been quite explanatory. So let's move on to the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for this week is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And so far this week we've done pretty well on this particular asset, though we had two losses on was it Wednesday or Tuesday? We had two losses on Tuesday, and in fact we were able to recoup these losses and of course made some top profit on top of it. So for the sake of educational purposes, let's run through what we saw at the beginning of the week and what led to the decisions we made. Now again, if you didn't watch my top-down analysis on the XAUUSD, please check out the link right in the description box below. We are only going to be deliberating on the 1 hour time frame, which is our execution time frame. So at the beginning of the week here, we had this situation, price action. Remember, we had our key level situated at the $2,325 area. And for those of you who are familiar with our structures on the higher time frame, you remember this level here had played a significant role in determining the direction of price action in the last couple of months. And whenever price action trades above our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, in addition to price trading above our key level at the beginning of the week was the fact that price was confined within a range for the first, I think for the first 7 to 8 hours, we had this range bound structure where price was confined within the 2,331 level and the $2,323.50 area, though we had price break down the support line during the Asian session. So that happened during the Asian session, so we were not around to take that move. But instead, at the time we came back here during our live session on Monday, we had price action back into the range bound structure, and of course we positioned ourselves right above the $2,331 level to capture that uptrend move. And since that moment, we have been buying the XAUUSD. We bought again at the 2,340. We also bought again at the 2,348 before the sell pressure resumed. Of course, the third position closed at break even, while the first two positions in total closed with about 120 pips thereabout. Then we also had the privilege of capturing some short-term selling opportunities, had the breakdown of this ascending trend line right here. We sold it right below the structure after price broke down both the 2,340 and the ascending trend line to signal a sell-off for us, and we rode that momentum all the way down into the $2,315 area to maximize that move. And then we had some couple of more structures to guide our trading activities during the second half of the week. Let me share them with you, and for a cleaner look, you might want to look at my Telegram platform or TradingView platform, as you will see screenshot of every point of entry we capitalized on. So right here on what day was that? That was on Tuesday. We had the sell opportunity. Remember, we wrote it down. We saw the breakdown of the 2,325 right here, moved our stop losses, and of course we were taking out with some small profit size on that one. Then we saw price come back again to break down the structure, but that went into a loss, recording our first loss on the XAUUSD. Then we had some new trading setup on Wednesday's trading session. Remember, for those of you who are part of our live session on Wednesday, we had a new development in the market after noticing that the market has been very choppy for about 36 hours prior to our live session, as market was range bound, trading within the 2,350 and the $2,315 area to emphasize the prevailing uncertainty in the market. And when we looked further into the structure right here on Tuesday, we were able to identify a descending channel after connecting the series of lower highs. Remember, we saw this resistant line of the descending channel right here, and then after connecting the series of lower lows, we had the support line of that descending channel. And in addition to this descending channel was our key level situated at the $2,325 area. Remember, when price remains above our key level, we want to be looking out for pattern and structures that supports the idea of buying the asset. And that area also shares a confluence with a robust demand zone, which we did identify between the $2,325 and the $2,315 area, where we were looking, that we said here that as long as price remains above this robust demand zone, we are not going to be considering selling. So we didn't consider any selling opportunity from Wednesday's trading session, as price was just sitting above that demand zone. Then right here during our live session on Wednesday, we said we will be joining that uptrend bullish move at the breakout of the 2,335, and lo and behold, we saw price break out that structure. In fact, if you're a breakout retest trader, we saw price come back to retest the structure, and boom, we saw price continue to climb and find new highs. We also added one more level at the 2,345 area, a level which interestingly shares a beautiful confluence with that descending trend line we identified on the higher time frame. Then we also added more at the breakout of the 2,325, and yesterday as well we also added one more at the breakout of the 2,375. So it was quite a tremendously profitable week for us all in this community, and for those of us who capitalize on this opportunity, well done and kudos to you. So at this point in time, all buy positions have been closed. In fact, I'm surprised to see this massive bearish impulsive move that took price to the downside, breaking down that ascending trend line that we marked out here. Now, before we go into the technical details here on how we are going to be managing this current market dynamics, let's quickly run through the fundamental factors behind the scenes that is expected to influence the sentiment in the market. In fact, it has been influencing the sentiment in this market, and I do, as usual, have a handful of highlight for us to look at together so that we can understand the current market dynamics. So here on your screen are a list of market drivers that will be or has been influencing the price of gold so far. Now, the first one on the list here is the anticipation of the Fed Reserve rate cuts. I think we've talked about this multiple times today, as there is a growing acceptance of potential interest rate cuts by the Federal Reserve later this year, and this is due to the slowdown in the US economy. And usually when there is the expectation of rate cut, the chances that a high appeal for safe haven assets such as gold usually increases. So this is one factor here that is likely going to favor the upside of gold. Then we also have the US labor market indicator. Yesterday we saw the initial jobless claim coming in below market expectation, showing that there is increased unemployment in the United States in the last 30 days. Then we also saw the ADP employment data also, which showed signs that there is unemployment too, that the labor sector in the United States is cooling at this point in time, and this has further contributed to the expectation that there is likely going to be an interest rate cut this year. Then the US Treasury bond yield, of course, for everyone in this community who has been part of us for a very long time, you understand how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is not doing well, it is expected that the dollar too will not do very well. Then finally, on this list is the US economic data. Today we are looking forward to the non-farm payroll reports, a very high impactful event that everyone in the market will be looking forward to. And of course, we said here that market is projecting a 187,000 expansion in that sector for the last 30 days. So we are going to be looking forward to see what the data will be. Will it be just as expected, below expectation, or even beyond expectation? But one thing we want to understand here is that if this data comes in higher than expected, there is a high chance that the US dollar will gain traction against the pound, against the gold commodity, owing to the fact that the expectation that interest rate will be kept higher for an extended period of time will resurface again. Then we also have the average hourly earnings, which we are also going to be looking forward to, and is going to play a significant role in determining the direction of price action for today. Now let's go right back into the chart and let's look at things from a technical standpoint on how we are going to be strategically positioning ourselves for the next move. Now, looking at the structure here and following this massive impulsive bearish leg that happened in this market, how do we intend to navigate this current structure? I personally have missed out on this opportunity, but let's see what we can do around this area. Now, one of the key structures here is this ascending channel. So we have the support line of the ascending channel right here, which already has been broken. Then we have the resistance line of this ascending channel, which is not significant for us at this point in time. Now look at the structure here. Price is gradually approaching our key level at the 2,325, and you know, when we have our key level, when price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying. Now another thing I would like to call our attention to is the resistant line of this descending channel, this one right here. You see we have a resistant line here of the descending channel, and look at what we saw here on Wednesday trading session. Remember, we capitalized on some buy positions at the breakout of the resistant line of that descending channel, as you saw here. And from a technical standpoint, when price action breaks out of structures like this, we expect that some point in time price may come back to retest the structure. Even sometimes we see price action break down a little bit, and at this point I would like to see how the market will react to the structure. In fact, I want to be seeing a reversal setup for us to continue an uptrend scenario. Now, from my own personal view, the path of least resistance is still looking bullish for me at this point in time. So I want to monitor how price action is going to react to this area, let's say between the 2,340 and the 2,325, which is still sitting right above that demand zone we identified earlier. So I want to be looking out for something like this. It could be a double bottom structure, inverse head and shoulder pattern, or a falling wedge, where I will be looking out for the breakout of the neckline to continue the uptrend move. So let's exercise patience at this point in time and see how the market is going to be reacting to this area. It could take about 2-3 hours before these old structures emerge, but trust me, I will be with you in the comment section of both my trading view and Telegram platform to give us updates as at when due. Now, like I said, I'm still looking forward to buying opportunities at this point. Now, if it so happens that price finds it difficult to climb back above the resistant line of that descending channel, the highlighted structure you're seeing in red on your screen right now, if price finds it difficult to break out of that structure, but instead does something like this, something like price coming back to retest the 2,345 area, and we see continued selling pressure around this area, I'm of the opinion that sellers may likely be ready to take over the market. And this massive impulsive bearish leg I'm seeing on this chart for me is a red flag. Like I told you earlier when we were looking at the economic calendar, I did mention that major key players in the market usually have inner cycles within this department that will be publishing this report. And from the information they get behind the scenes, they build up a position ahead of the event. Now, for me, seeing this massive bearish impulsive move, I'm of the opinion that the path of least resistance is still looking very bullish as they want to double their profit. So those who had capitalized on this bullish move all the way from this demand zone into this new high at the 2,387 may, after getting the report, want to take some profit off the charts, make some profit like this, drop the price back down, and this might increase a false notion that price will drop to the downside, and a lot of people will jump into the bandwagon to run price down, and lo and behold, we could see a reversal pattern here to now increase the momentum to the upside, hereby doubling their profit on that bullish momentum. So I will not negate the bullish expectation in this market, especially when price action is still trading above that robust demand zone we identified here. So at this point in time, what I will say here is we should exercise patience. Please, let's exercise patience here, and let's see how the market is going to be reacting to that confluence of the resistant line of the descending channel and that area between the 2,340 and the 2,325. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you update as at when due. And of course, and that reminds me, we are going to be running the XAUUSD live monitoring window later today. It usually kickstarts 5 to 10 minutes into the New York session. Sometimes I come in late. It might be 5 minutes after the New York session has begun, but around that time it's going to be coming up, and we are going to be monitoring real-time price action on the XAUUSD together, so you have the chance of seeing how we enter positions in real time and how we manage our positions as well. So you do want to be part of that session. The link to that platform will be seen as soon as this live session ends, so I encourage us all to click on that link, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD today. So let's see how the market is going to play out in the next couple of hours. And if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. So I will be seeing you in the next 10-15 seconds. Use that time to mark out these levels accordingly on your charts. See you in about 10 seconds from now. So I see comments here. Okay, Fluoride, thank you very much for the instruction to Salami. All right, Salami says that, yes, that's true, but it's not my name you're supposed to be looking for. If you look at the wording screen at the bottom of your screen, you'll see the username is Trading with Master Sheriff. So Trading with Master Sheriff is what you are going to be typing into your search box on the Telegram platform, okay? No space, just type it out, Trading with Master Sheriff, and it will take you to my channel. And okay, to make things easier, let me just send you the link in the comment section. I hope you get that. Click on that link and it will take you to my channel. I hope that will be helpful. So let me know what it's looking like from your hand. So in the absence of no questions, in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. It has been a wonderful moment with you guys. I really appreciate every single moment. I love the energy in the house. You guys are wonderful, and I also appreciate the support you have given the community, the channel. We have over 21 likes today. Thank you very much from the bottom of my heart. I really appreciate it. And let's see how today is going to play out. So today we were able to attend to the 3 financial assets on our watch list for this week. We've been monitoring the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And so far this week, we've done fairly well across all the assets we are monitoring so far this week, and we are hoping that we can replicate and continue the success during today's trading session, which we all know is usually characterized with high volatility due to the fact that it's the last trading day of the week, where majority will be rounding off their trading activity ahead of the weekend. And to double that is the NFP report, which is another major highlight for today. So I do hope we all marked out these levels and structures we identified on this chart today. If you have done so, well done and kudos to you. So all we need right now is exercise patience and allow these structures to mature. And while we do this, I also want us to remember that every decision we make in the financial markets is more or less an educated guess until price action hits your TP target. So with this understanding in mind, I encourage you to have a well-defined risk management strategy in place to mitigate risk on your portfolio. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in improving your own trading decisions. I look forward to seeing more of you, same time on Monday morning, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to open to start the week on another positive note. And if you are yet to subscribe to the channel, I encourage you to do so right away, as I will be sharing my ideas ahead of next week, what my plans are going to be like, so you don't want to miss out on these insightful ideas. Click on that subscribe button, click on the notification bell so that you can get notified as soon as I drop new content. So you guys are wonderful. I really do appreciate from the bottom of my heart your support. You guys are wonderful. I see you, Simon Bayoni, Odueno. I'm glad to have you around. I'm very glad that you found this content helpful. They are like a source of inspiration for me too as well. So I look forward to seeing all of you during the XAUUSD live monitoring window coming up during the New York session today. So let's see if we can replicate our success so far this week. So it's on this note we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment. I wish you all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone, and a wonderful weekend. Bye.